through the topics in the form of like a presentation discussion, right? And we're going to save time for the end. If anybody has any questions, we'll be happy to do our best to answer them for you. If not, we can always come back to you with responses. And then we figure we'll show you a little bit of a demonstration on some of the finer points on how some of the things we're going to talk about can actually be achieved. Okay, so just quick introduction in case you're not familiar with who WeIntegrate is. I am one of the co-founders. My name is Marc Kalman. I've been involved in supply operational finance software for over 20 years, working primarily in the small business market. I've done everything from EDI to ERP to eCommerce, back again. And my partner, who's the master of technology, Gennady Kleiner, is here as well. He has a good track record like myself, who's been doing this for a long time, helping larger companies scale, but also working with smaller businesses. So between the two of us, we bring a really unique flavor of simple systems that have a lot of power and efficiency behind them. And some of you may know Randy Johnston. If you were at Scaling New Heights last week, you probably attended one of his presentations, if not all of his presentations. So Randy Johnston is on our advisory board. He's a big fan of WeIntegrate because of some of the differences that we're making in the market, even at our early phase. If you haven't heard about WeIntegrate before, you're not alone. We are newer to market. Of traction and identity here, and tell you people that use our system love it, and I say that not from a biased perspective, but from we get a lot of great feedback from folks. In fact, we're on the Shopify marketplace, and we have 100% 5-star reviews, partly because of the system and partly because of the service and how we stand behind our systems. Okay, so what are we going to talk about today here? We're going to go through the basics of Shopify bookkeeping and some of the decisions, right? Again, this is all very high level. I'm not going to get too deep. We're not accountants, but we work with accountants. We understand a lot of the basics. We'll talk about the basic chart of accounts that, from a certain perspective as it relates to working with Shopify. And some of the ways you might set up your chart of accounts may vary depending on some decisions that you make on how you want to manage the Shopify bookkeeping. Then we want to have the discussion around, there's some folks are big advocates on using journal entries to do Shopify bookkeeping, and others prefer to have details, right? So we'll talk about the pros and cons of each. And then the last three, we figure it's probably best to actually show you, right, on how these things can be achieved. So we'll talk about, if you're familiar with clearing accounts and some of the pains that we've heard some people go through in managing clearing accounts, we'll show you ways that you can avoid that or at least minimize it. And if you're dealing with sales tax issues between Shopify and QuickBooks, you'll have an opportunity to understand how it doesn't have to be so complicated in managing sales tax, and that the sales tax between Shopify and QuickBooks can be just matter of fact, simple, straightforward. I know it's hard to believe, but it will show you. And then automating payout reconciliation between sales and payouts, right? Which, we'll talk a little bit about why that matters as well, when we get into some of the comparisons between the details and journal entries. Okay. So, and as we go through this again, just jot down your questions. I think there's a chat, right? So you can pop those questions in the chat. But again, if not, we'll save room at the end for questions you may have. All right, so let's just get into the basics of the bookkeeping, right? So one of the key fundamental decisions you'll need to make going in, aside from the fact of whether you want to get into this or not, right, is whether you want to work in a journal entry capacity or if you want to work in a detail capacity. And before we get into that, going back to the other comment I made about, whether this is a market you want to get into or not, I'd look at it this way. I mean, I happen to be an e-commerce fan or commerce in general, right? Because one of the trends you'll see, if you haven't already seen it, or maybe you've read about this or you're from the industry, so you know it. But we refer to it as e-commerce today, but more and more and more, it's just becoming commerce, right? There used to be a difference between whether someone's selling in the store or someone's selling online. But these days, it's all kind of like blended together. Like it's just a big blur, right? And you probably have heard terms like BOPIS and ROPIS, and like buy online, picking up in the store, and being able to buy in the store and return somewhere else, right? Being able to walk into a store while I'm in the store, purchase online, there's all sorts of variations, but the idea is that it's just a blended world of commerce. So if you're into the retail market, whether you realize it or not, at some point you will be doing e-commerce, right? And if you look at the way Shopify themselves position already, they're already functioning as a blended commerce kind of a solution, right? Because you can have one Shopify store connection, and from that one Shopify store connection, you can go online, but you can also set up a POS, right? It kind of comes together. In fact, we have clients that have 3 or 4 different POSs. They have like one Shopify store connection. They have 3 or 4 POSs, and they also sell online. So they have multiple locations even, right? So it's just, that's the way the trends are going. It's expected to be an explosive market over the coming years. And whether you like it or not, you're probably going to want, if you are in the world of retail in some way, shape, or form, and that could be products, that could also be services, right? You're probably going to find yourself doing some form of what's currently referred to as e-commerce, right? Now I got that out of the way. Back to journal entries versus details. So this is just a decision you're gonna have to make, and we're gonna, go have a little bit of fodder here in a second about the pros and cons of each. But that's gonna be one of the fundamental decisions that you're gonna need to make early on. Then, depending on that decision, you're gonna go ahead and have to kind of organize your chart of accounts. Now, QuickBooks Online, of course, gives you a lot of that, as you know, if you've used it before, and you could be a Shopify bookkeeping veteran already attending this call, and you could walk everybody through a class on this stuff much better than we ever would try to do, right? But there will be certain things you will want to set up. What that is will depend on a couple things, actually. One, whether you decide to do journal entry approach or details, and number two, which sort of assuming that you use an integration provider like WeIntegrate or one of our competitors, you would you also have some distinction on how you might set up your chart of accounts. And so we're going to walk through a little bit of examples here on this call. But again, it's going to be a little catered to the concept around using more of a detailed integration approach, which is, and I'll explain why that matters in a second, versus and using our system. And the third decision is do you want to work with an integrated solution provider? If you're serious about, if you have 1 or 2 clients and it's low volume, we see people sort of decide, they hem and haw about it a little bit. Do they want to do it? Do they not want to do it? Is it worth it? Is it not worth it? Well, we would say probably even if you have 1 client with low volume, it's worth it. Particularly if you use somebody like WeIntegrate, because we, for as little as $19 a month as an example, you can get into something that will automate the transactions for you. And that, even if it's a client with 10, 20, 30, 40 transactions, how much time would it take you to enter manually these, 10, 20, 30, 40 transactions? Or even if you're doing journal entries, right, that still takes time. And you're going to probably still have multiple journal entries, and you're going to have to sync up some stuff, right? And then when you think about the approach you want to use when you do get into Shopify bookkeeping, regardless of whatever decision it is, we recommend at the forefront of that decision keeping these 3 components: efficiency. Can I automate this stuff, or is it worth automating? And how do I maintain the highest degree of accuracy, right? Because last thing you want to have is issues, particularly when you go to reconcile stuff, and you're running into how come this isn't matching up, and then you got to kind of dig in, and you waste time trying to go back and address that, right? So just some of the initial thoughts that you want to think about as you consider going into Shopify bookkeeping for clients, and again, we are also specifically, I should mention, focusing around QuickBooks Online, which is the perspective we take at the moment. Whether you're using like Xero or, FreshBooks or something like that, some of these decisions, again, may be a little different, but I think the basics are pretty much the same, right? Okay, so just giving some examples from a chart of account perspective, right? So these are sort of like the basic things that you would set up, particularly if you're using a system like WeIntegrate. So you can see there's not a whole lot you have to do for basic integration. You might, have seen other perspectives of this, and this might have been some of the parts that maybe, make you pause, right, or hesitate or feel that it's very confusing when you think about getting into the journal entry approach, right? Because again, the journal entry approach on the surface sounds simple, right? Because it's dealing with summary information or journal entries, right? In a lot of ways, but there is a complexity to the setup, right? The chart of accounts might have some differences to it that you might have to account for, because some of the things that maybe, when you're working with details, you can work a little bit more with the inherent QuickBooks processing. You might have to account for manually or separately, because you're not leveraging the things that QuickBooks might normally do for you, such as sales tax, for example. But the basics here would be you'd want to have some sort of Shopify, sales account, right, which generally is an income account. And at the detail type level, it's usually sales of product income. You'd have a discount account, right, for Shopify. You also have a shipping income account, right? And by the way, account names, these are just, obviously you can call them whatever you want. So whenever we're working with our clients, we say, and partners, we say, look, call this whatever you want to call it, but here's some ideas and some ways that we refer to these accounts, right? So you'd have a shipping income account. In our case, we're just showing you Shopify shipping income, but call it what you want. It's an income account type, and it's detailed service fee income. There would be a cost of goods account, obviously. You'd want to decide, I guess, if you're going to keep that separate for Shopify, or you just have one cost of goods account. We've seen people do it different ways, if it's shared inventory, etc. Then you would have a processing fees account, Shopify processing fees account. We've seen sometimes people set it up as an expense, but from what we've learned and what we see, again, use you guys are the accountants and bookkeepers, not us, but we do see that it seems to be a better practice to do it as a cost of goods sold for the processing fees. You would obviously have you'd want to have a gift card liability, particularly if your clients are using gift cards, which is generally an other current liability account type and detail type. And then something that would go into unmatched sales, like when there's discrepancies between the systems, particularly during the payout reconciliation process, how do you account for things that don't match, right? So that's the bulk of the chart of accounts. Now, when you're using WeIntegrate, there are a couple other item-related things you might want to set up. For example, what we do is you'll notice on here, we don't say have refunds, right? Partly because we're just using the standard refund process that QuickBooks has. However, there's one caveat to that. As many of you may know, when you're dealing with refunds inside of QuickBooks Online refunds require that there be an item, right? QuickBooks will not allow you to set up a refund without an item, period. Very rigid on that. Shopify, on the other hand, while they do also embrace the idea of having a refund associated with a return, they do allow you the ability to issue a refund without an item being associated with it. Sometimes people refer to this as a customer service refund. That circumstance, inherently, those create problems for QuickBooks because QuickBooks won't accept those. So what you would do is, if you're using a system like WeIntegrate, you just simply set up an item. We generally refer to it as like the no item refund item. And then all those no item refunds get mapped to this one item as a service item. And then everything goes through just simply straightforward as it should. And everybody's happy. So that's just one example of something there. Now, so that's, again, basics of chart of accounts. There's obviously more complicated scenarios. You might find yourself splitting up your income accounts if you're dealing with other types of sales channels, right? Of course, but in a basic sense, particularly if you're using a system like WeIntegrate, this is a simple snapshot of the kind of chart accounts you'd be looking at. So let's get into the debate or the fodder conversation here, right? Details versus journal entries. We'll start with journal entries, right? And why? What are the benefits of journal entries, right? So because there are benefits, and I guess it depends, right? I think at the end of the day, what it all boils down to is preference and what you truly believe is going to be more efficient for you, right? But when we think about it, when people say, hey, I'm going to use journal entries and here's why, right? Here's what we see is listed as some of the benefits, right? Well, you're dealing with, summary data. So you don't have to have all these different entries, right, of transactions. You don't have to have, thousands of customers clogging up the system or items you don't have to manage, right? Everything's just sort of aggregated into a lump sum summary. As a result, the perspective is that QuickBooks is easier to manage, right? That you don't have to deal with as much complexity and much stuff to kind of conquer through. You don't have like a lot of manual effort in dealing with individual transactions, right? So the thought is that journal entries can be simpler as far as just managing QuickBooks, and less work, of course, right? Because with less data, simplified transactions, kind of the thought is that reconciling this information or managing this information or even getting the information into the system is easier and it's faster. So that said, what we also see, on the other hand, the disadvantages of using journal entries is that sometimes summary data isn't all it's cracked up to be, right? It can be challenging to work with. While maybe at the surface level, it seems easy and it's simple, it can be challenging in the sense that, when, things go bump in the night, something doesn't reconcile, something doesn't work out properly, it's not necessarily as easy to sort of figure out what went wrong, right? So that's one of the disadvantages that we hear. Another disadvantage we hear is that you can't use inherent sales tax calculating. Like you just can't use the QuickBooks sales tax. And some of you are saying, well, that's a good thing. Well, we'll show you in a little bit why that's not necessarily a good thing. But in general, you do have to manage it separately, right? And that's why a lot of times, you have to figure out, like, how do I get those right taxes in there? And Avalara or TaxStar add-ons have to get involved, right? And so it just kind of, some sense, complicates the process of sales tax. And the other thing is that you have to manage clearing accounts, right? And some people say, well, I love clearing accounts. I actually haven't ever heard anybody say that personally, but I know someone's out there that does feel that way. But, when you do the clearing accounts, there's complexities there too, right? Because sometimes they don't balance out or they don't clear out. And particularly when you're dealing with going over the end of the month, right? That's another issue too, by the way, with sometimes summary data. Sometimes summary data there's delays of time, right? Like where the data is not necessarily coming in as the transactions are occurring, and particularly in scenarios where that data coming in as a summary journal entry is tied to being generated from, let's say, a payout, as an example, you might actually have a scenario where, well, for starters, you're not getting that data for 3 to 5 days into QuickBooks until after, right? Because the sale might happen today, but Shopify doesn't process the payout for 3 to 5 days. So it's not until 3 to 5 days from now that you're going to see that information come into QuickBooks. Right. In addition, if let's say it's June 30th when the sale happens, but then 3 to 5 days later, now that data is on July 3rd or July 4th, right? So now it's coming in a different month from when the transaction occurred. And I know sometimes that might depend on, whether you're using, cash versus accrual and that sort of thing, right? But this is the reality of how the data gets processed. So, and you might also be saying, well, hey, it doesn't matter to me if the data comes in later. That's okay. Well, I would say maybe not, right? Because today it's a very competitive world, and the general thought of data is the faster I can see my data and make decisions, the more competitive I can be, right? And so and sometimes that's financial based data. Sometimes that's cash flow based data, right? So, I wouldn't necessarily assume that delays on data are always like the best things that it's okay. Just giving you different, viewpoints on that. So let's talk about sales details, right? So what might be some benefits of sales details? Well, if you work with details, generally speaking, these systems will embrace QuickBooks Online the way it's intended to be used, right? Or that's the intent of the way these systems try to operate, where we're not reinventing the wheel. We're just, loading sales. Basically, everything is running as if you were sitting in front of the keyboard, just something else. The system is doing it for you, so you don't have to do it. It is the only true way of tracking inventory inside of QuickBooks Online. And again, I know there's a talk track out there that says, well, you shouldn't be using QuickBooks Online for inventory. We would say, well, that depends, right? Like if you're doing manufacturing or complex type of inventory, you're probably correct. But if you're doing simple inventory, distribution inventory, well, there's no reason why that inventory can't be updated inside of QuickBooks. Like, why does it have to get more complicated than that? Or at least tie and balance out between Shopify and QuickBooks, right? And sometimes people say, well, I don't want to necessarily have that data in both systems either. Well, great. But you know what? There's another school of thought that says I can reconcile better if I know that I can match this to that, right? And I don't have to, like, sometimes relying on just a single system to give you information doesn't always vet out to the right answer either. When you're dealing with the details, it enables the ability to use the QuickBooks Online sales tax process and Nexus capabilities, as opposed to having to deal with that separately. It can also empower faster reconciliation between, let's say, even things like sales and payments. And when things do go bump in the night, it will eliminate wasted time, right? Because you'll have the information in front of you. It'll be easier to spot what went wrong, right? Because it's a little bit more granular, and just so you generally will spend less time of working through the issues. So when we think about what are the disadvantages of details, now at the end of the day, it really boils down to whether you have the desire, if you just have the desire to have summary data, right? Like, and with that, right, the other part to that, which I didn't put here, but it's true, and I will say it, is that if you, one of the reasons you might desire to have summary data is because you perceive or believe, or, could very well be true in certain cases, that you might have more data to manage, right? And it might be a little bit more complicated, right? But again, part of that also depends on, how you're getting that data into the system, and if you're using an integration partner, which partner you're working with. Okay, so gave some good food for thought. Love to chat about that, further with you if it's the kind of thing you love to talk about, even debate it a little bit. But just want to kind of go through that. Now, just a couple quick things about what we consider a good Shopify bookkeeping framework. And this is kind of lead us into being able to show you a couple things on how our system handles a few of these things here. But our belief in a good qualified Shopify bookkeeping framework is built off of these 5 components, right? Incredibly fast integration is key, right? The speed and accuracy is paramount. It's a really big deal. It's a much bigger deal than probably some people are making over it, again, because having that accuracy, being able to pull those financials, make fast business decisions, helps even the merchant maintain competitiveness properly, right? Being able to create and updates from the Shopify sales as the customers are ordering online. Same thing goes for refunds, and making sure all that is accurate and in sync. This third one is optional depending on if you're doing inventory or not. But assuming you are doing inventory, you would track that inventory instantly, right? So as the sales come in, instantly change that inventory, which is very important if you happen to have inventory across multiple stores, right? So let's say you have one, inventory bucket, like one, set of inventory. And so you might have a cup, right? And you sell this cup, but you sell this cup on 2 or 3 different websites. Well, it's essential that you have a way to be able to have that update, right? And instantly, as fast as you can, and instantly tell the other websites that this inventory is out of stock, right? Or that we have one less available, because the last thing you want to have happen is if you had, let's say you had that 1 cup left and somebody on store number 1 bought it, you don't want people going to stores 2 and 3 thinking it's still available and buying it, and then you have to deal with a customer service issue, right? That's like letting people buy things that aren't available, that you can't ship the right thing at the right time, is one of the big no-nos of e-commerce, right? So very important to be able to do that quickly and efficiently. And being able to effectively and accurately and easily, without like stressing over it and it being a nightmare, the Shopify sales tax and physical and economic nexus management. And then also very important is the ability to be able to reconcile the like creating QuickBooks bank deposits from Shopify payouts, properly organizing the processing fees, and having all this update and match for you automatically without you having to get involved. We feel the less interaction that anybody has in any one of these components of this framework, the better that your process and your ability to serve your clients will be. If I could ask, if somebody's everybody put yourselves on mute again, if you don't mind. We're trying to avoid the background noise, if you wouldn't mind. I appreciate that. Thank you very much. All right, and while we're on that topic of instant integration, let me just kind of talk about a couple more things about it, right? Again, why it's important. Well, again, these are highly competitive these days. It's not, it's not a casual world out there. You need big data fast as you can. The faster the data, the accurate data, of course, the more informed you can make your decisions on a timely basis. And as a result, it's also good to be able to book your sales when they occur, and separating the concept of sales from payouts, right? So when you work in this capacity, you don't have to have it all lumped together, right? As a blob, right? It could be separate. They could be respected the way that they're supposed to be respected, the way that they're intended to work, and keep sales from payouts. In fact, I don't know if you guys watch Dan and Rachel on the School of Bookkeeping shows. Just like a few weeks back, they were talking about Rachel was going through a whole thing on reconciling payouts and PayPal and all this stuff. And she said one of the big mistakes people make with PayPal even, and why PayPal sometimes gets a little complicated, is setting it up wrong. And partly what causes people to set it up wrong is because one option that PayPal gives you is to, treat it as a sale. And she just made this really big point on that session about the importance of creating sales from payouts. That these are two separate things. And that's one of the things you can leverage when you're dealing with this instant integration methodology. And you get better access to timely cash flow and inventory visibility, which again, when you think about being able to make smart decisions quickly, having access to that visibility is very important. Okay, so we're going to switch over and share a bit of a demo. In that demo, we're going to cover the other 3 points on how, by using a system that deals with details, you can minimize the use of clearing accounts, how the sales tax can be properly managed inside of QuickBooks Online, and how the payout reconciliation process can work, and show you a little bit about our system and how you could address those 3 points that we brought up, right? Minimizing the use of clearing accounts, dealing with the Shopify taxes, as well as the payout reconciliation. Okay. So, and this will not be a full demo, just to be clear. If you do want to see a full demo, again, just contact us. We're happy to set up a one-on-one session with you and walk you through A to Z on how everything works. Today is just really about kind of highlighting those key points so you can understand how that would work. Now, in our system, because we deal with details, right? And we have a solid integration with Shopify payouts, between Shopify payouts and sales. What you would generally do is, here under our preference section, we have sales and refund defaults. And you basically say at a high level, when I'm loading sales into QuickBooks Online, ergo creating sales receipts, right? You're generally going to deposit the payments into undeposited funds if you're going to use our Shopify Payout integration. And why is that? Well, because that's the way QuickBooks works, and that's what they require. But it does simplify it because now you don't have to deal with all this stuff. Now, you might say, well, you know, the nice thing about having clearing accounts is you can kind of split things out a little bit, right? So one of the things you could do here is, if it's of interest, is you could go in under our connections where we have, in this example, I have 6 Shopify stores connected to WeIntegrate. Each one has their own settings, right? Because each store may function differently on, you know, it might be selling different types of items. One might be B2B, B2C, so how you handle customers might be different, or right? So there's all sorts of independent store decisions that go on. So we have a set of settings at the store level. And here at the store level, what you can do is on sales, you can choose to work with locations in QuickBooks, right? So you could say, all right, even though I'm loading everything into undeposited funds, if I add a location, that gives you a way to filter out that data that's in undeposited funds by location, right? If you've seen even on if you're dealing with a bank deposit. So let's say you have you have your Shopify business coming in, and then you have your non-Shopify business that's going on. Maybe, you know, they're doing pop-up stores and they're not using Shopify, or maybe they do like a wholesale thing and they handwrite orders, or they put invoices right inside of QuickBooks, right? So you could set up a location for Shopify, and you set up a location for, non-Shopify, or whatever you call it, right? And then here, when these orders load in, make them all Shopify and do the other ones as non-Shopify, and then you can kind of filter out, even if you had to do those bank deposits manually, just go for the non-Shopify, just get for non-Shopify, right? And it will exclude all the stuff. So that's just one simple example on how you could even leverage undeposited funds and split it out by leveraging locations. So that's, people tend to like that. Now, another thing you'll be able to do is, you could have the undeposited funds go for your Shopify payouts, and then maybe you're dealing with other things, other payment providers outside, let's say like PayPal, etc. Well, then you can put that stuff into a clearing account. So that's why we don't say necessarily eliminating clearing accounts. Like, you still may use clearing accounts for PayPal and things that aren't going to get auto-reconciled through Shopify payouts, right? That you have to kind of deal with as a separate reconciliation. But if you're not using PayPal, or even better, if you're using PayPal through the Shopify payouts, right, because that is an option, then you can, in that case, if it's just kind of like one payment gateway that's getting used, then in fact, you can eliminate clearing accounts in that scenario. So it's either you can get rid of them or you can minimize them by using a tool that's structured this way. Okay, so that's about getting rid of or minimizing the use of clearing accounts. And again, happy to discuss that further with anybody afterwards. Now let's talk about sales tax. Sales tax is really, we find probably the biggest thing that people are dealing with, and maybe one of the biggest deterrents of working in e-commerce along Shopify. So what I'm going to do is I'll do a quick demonstration for you, and I'm going to ask you to just kind of bear with me. I'm going to move as fast as I can through this process. I'm going to have to make a couple of quick sales for you, but I want to show you a couple things before I do, so we can get on the same page. So if you come in here, you'll see under sales tax, right? We have $260.65 of sales tax in the New York tax agency. And you'll see I have a total of 4 different tax agencies here. One of the challenges you face with QuickBooks, aside from the fact that left on its own, and if you've gone through this already, you know what I'm talking about, that you could have 100 orders in Shopify, and you could even load those into QuickBooks or manually put them in QuickBooks, or however you're going to do it, and you're going to get confused because the sales tax isn't going to match, right? It may not be off by a lot. The more you do, the more it'll be off. It might be pennies here and there, but there's something in how the calculations are done, rounding, etc., that they just veer off a little bit. Okay, so that's one of the issues. But the other issue is that QuickBooks Online, for all intents and purposes, by default, is a single address system, right? And as you know, when it comes to tax, agencies, right? You have to know that I'm charging tax, for New York, or I'm charging tax for Kansas, and it's going to go into that agency, right? But for QuickBooks to know to charge tax on those agencies, it expects on the sales receipt that the ship from location and the ship to location are the same, right? So that's how it wakes up and says, oh, I have a match. I'm shipping from a location to a location. I have a physical nexus, and therefore I need to apply my tax. It's really that basic. Shopify obviously handles it, much more advanced, right? Shopify knows you have 3 or 4 different locations. One could be an office and 3 warehouses, or a remote sales office, or whatever you put up inside of Shopify. And as a result, we'll go ahead and calculate the sales tax or not sales tax, keeping all the nexus into consideration as it goes, right? Whether you're using Avalara or not, or TaxJar, or one of those guys, right? But it handles that, as you would expect it to. QuickBooks is a little bit more not as comprehensive with that, unless you force it to work that way. And one of the things we figured out is how to force QuickBooks to work the right way, so that it will apply the tax to the right place. So I'm going to show you, for the first part is to show you that we're able to get the right tax in the right place. So pay attention to the fact that the New York tax amount there is $260.65. The other part to it is the economic nexus capabilities, where you come in here and, for example, right, I don't know if you guys, some of you are probably familiar with this, right? Where the stuff that's not getting the, sorry about that, spam call coming in, get rid of that. Some of you may, may have used this before, right? So when you're not collecting taxes, right, that you have to manage the economic side of that, right? And QuickBooks actually has an economic nexus tool that's pretty good, right? As far as letting you keep track of where you are. Like, so for example, you can see we've placed orders here in Georgia, 163 orders, a total of $10,000 in sales, against the requirements here of $100,000 and 200 transactions, right? So we do have that ability to help QuickBooks understand that as well. So that's what I'm going to show you here right now. So let me go ahead, and I'm just going to place a couple quick orders in the system here, and we'll go quickly through this. I'm going to add a blouse. And by the way, I'm on a Shopify site. I know it looks terrible, but this is just our trial. I'm in my test environment here. And we don't spend a lot of time setting these things up. So let me get rid of part in. Let's do the shorts and the blouse. In fact, let's make it 1 and 1. Same thing again, right? So we have 1 blouse, 1 shorts, right? So we're at $60.99 on the merchandise amount. And here inside of QuickBooks now, we got the cart, and you'll see currently there's no tax, right? But as I go and let's say we say sandy.tester at test.com, right? And we'll just fill in this data real quick. Sandy Tester. And we'll say Sandy is in New York somewhere. Let's say 1000 Fifth Avenue. And now all of a sudden you'll notice that Shopify knows to charge tax. The reason Shopify knows to charge tax, which I didn't show you, which I could show you real quick here, is in the settings. And if I go into locations, we have 3 physical addresses set up. We have a New York address, a Kansas address, a South Carolina address, and the main corporate address is set up as a New Jersey address. So those are where the 4 locations come from, right? So now Shopify knew to charge $6,076 of tax, and it's $82.75, right? So we're going to ship it there. We'll just do economy shipping. We'll put in one of these like pretend credit card numbers that Shopify works with, and then we'll go ahead and we'll process it. Okay, so that's the first order I'm going to push through. The second order I'm going to push through the exact same thing, and I'm going to do a blouse. We're going to do pant shorts again. So at the item level, the merchandise is exactly the same. We're going to now go and check out. And this time we're going to do Danny Tester at test.com. Any tester lives at, let's say, 100 Peachtree Street, Atlanta, Georgia. Anybody here's from Georgia? I've actually been on Peachtree Street in Atlanta, Georgia, and Buckhead. So I'm familiar with it. Some cool restaurants over there. Okay, so now you'll see it's the exact same merchandise. And look, I put a Georgia address in because I don't have a physical location set up for Georgia. Shopify knows not to charge tax, right? So this net total is $75.99. So we're going to go ahead and pay that. Real quick, look over here on the WeIntegrate side before we go over. Not that we have to, but I'm just going to kind of show you this real quick. Because I want you to see that the pass-through data is correct. So wait, and when we talk about instant data, by the way, this is how fast the data moves through a system like ours, like WeIntegrate. Like, so we're already, like, these two orders are already in QuickBooks. Now, we have a setting that lets you determine if you're going to use the QuickBooks order number or, the QuickBooks sales receipt number in its sequence, or the Shopify order number as the sales receipt number. I currently have it set to use the QuickBooks Online order sales receipt number, so it's giving me a different number, but you can choose to use, like I could have used 1702 as the sales receipt number. But in my case here, we got the sales receipt number 3346 and 3345, right? And you can see going through our system, we have the exact penny amounts that I showed you, 82.75 and 75.99. So if I go over to QuickBooks now, before I get into tax, let me come back over here to the sales transactions themselves. And you'll see here they are, 3346 and 3345. So I wasn't kidding. They actually go in to QuickBooks that fast and that accurate, right? It's 82.75, 75.99. I'll first take the one that has the sales tax on it, 82.75. And again, we'll get in another time, we'll get into, you know, the concept of how we have like a bulk customer here versus customer detail matching and item details versus item bulk. If you don't want all that stuff, right? That's another conversation. But for the sake of today, right, just kind of showing you here that when we come down, we have the item. The advantage of using details is it gives you the ability to map sales inside of QuickBooks and run reports by class, right? In fact, I just got off a call with someone this morning that they're using POS and they have a trailer business, and so they want to segment between trailers, parts, and service, right? So by leveraging class, you can pull those classes for those items into the sales receipt, and then you can run all your reports and data and financials by class, which is kind of cool, which you can't do when you're dealing with summary journal entries. But you'll notice here the tax got applied, right? And it's going to show up in New York. Why is it going to show up in New York? Because we're shipping to New York, and we told QuickBooks that we're shipping from New York, right? We pulled one of the New York addresses from Shopify in here, and so we're sort of faking QuickBooks out to understand that this is New York to New York, so it has to apply the tax to New York. Okay. In the Georgia example, you'll recall we don't have a Georgia location that we're, related to the business, so we're just shipping to someone in Georgia. So that's going to be more of an economic nexus scenario as a result, right? So we're shipping to Georgia, and we just left the main address here of New Jersey, right? So it goes New Jersey to Georgia. QuickBooks says, okay, I don't have to collect any tax right now, but we'll put it into the Georgia economic nexus tool, right? When we do that, you'll see that. So everything's perfectly matched, etc. Now, when I go over the sales tax side of this, you'll see now under the agency, right, that tax went up by the $6.76, and now it's $267.41. Okay. I'll go into the economic nexus, and sometimes there's a delay on this. So if it doesn't calculate, oh no, it went the update. Okay, cool. Sometimes there's always a delay. You'll see the number of sales went up from 163 to 164, and the amount went up to 10,080.28. Right. So we automatically, we tell QuickBooks, we help it understand how to do the physical and economic nexus based on exact sales tax dollars that come in from Shopify and being applied to the right agency or the economic nexus based on an algorithm that we have. It also works very well for POS as well, in case you have any POS customers. Okay. So that's an example of how simple the sales tax can be, right? Because I don't have to worry about any manual payable updates and all that other stuff. We're just leveraging the inherent functionality that QuickBooks has. We're just helping QuickBooks to understand how to use it properly. nothing you have to worry about. It just happens. It's kind of like, that's why if you've seen some of our latest advertising, we talk about it as just put your Shopify bookkeeping on autopilot, because all you do is you just connect us. And in this case, it just kind of goes into the right agency as long as you have the agency set up. So it's I don't want to oversimplify it, but it's kind of like that simple. All right, so that's that. Now let's do the last piece I promised you. We got a few minutes left to do it, so we can do it real quick. Gennady, could I trouble you to issue the payout so I don't have to turn my screen off? And then maybe just kind of shoot me or give me a thumbs up that you're good on that. And then we're going to go ahead and run. So why I'm asking you to do that is when we're in our test environment, Shopify doesn't, there's no way to sort of automate the payout pull from them. So we have to just kind of initiate that manually. So I would have to go into our admin tool to go ahead and do that. But obviously in real life, it's all automatic and automated. In fact, while he's doing that, let me show you this real quick. We have a payouts tab. And on the payouts tab, you'll see we show you the status. So most of these are paid because we're doing a lot of paid functionality and demos and testing and stuff. But we also, as you may know, if you're dealing with Shopify payouts already, there's different statuses that come in on the payouts, right? There's paid, but there's also pending, there's scheduled, there's in transit, right? When that comes in, you want to have visibility to that, right? And so we give you visibility to that. We don't create those deposits until they're paid, but we show you that they're coming, right? So you can kind of see them coming through. They'll just kind of sit here, and then the moment they become paid, boom, they cut over to paid, and then they get pushed into QuickBooks Online. All right, so now if I hit refresh, you're going to see the new payout that Gennady just loaded for us based on the 2 orders I just processed, right? So here you'll see we have $158.74 minus $477 in fees for a net payout amount of $153.97, right? It's already in QuickBooks Online. So what we just did too is we created the bank deposit inside of QuickBooks. So I'm about to show you. Before I show you that, I'm going to kind of work backwards here. Is we have reconciliation available too. So we show you, if I click this, see how we got a green $sign here, and here we got a pink $sign. If I click the green one, it's going to show me, this report shows me on the left side, inside that payout, there were these 2 orders, right? Here's what they totaled out to, etc. And in the QuickBooks side, when we make the bank deposit, we wound up with these 2 checking off against these 2, matching these 2 sales receipts, and then the processing fees got added, and everything's green, everything's matching, everything ties out, right? However, there could be a scenario where they don't match, right? So if I come here to the pink one, you see this didn't match. There was a discrepancy by a penny. We call out the line fee. It's on line 3, so you don't have to go searching for it. In fact, we call it here. We make it very easy for you to find your discrepancies when they occur. The other thing that we do too, before I go show you this in QuickBooks, is at the order level, you'll notice, see these little $signs here? So these are the 2 orders that I just sent to QuickBooks that Gennady just ran the payout against, and it shows you that these 2 orders have been paid. So you can see easily that these orders have been paid. These orders have been paid. Well, what happened here? These 3 are still blank. How come these 3 orders have not yet been paid? So we give you a very easy way to see and determine the difference between sales that have had the money come in from Shopify and sales that have not yet been paid. By the way, when you're dealing with a system that creates sales from payouts, you can't really do that, right? Because the sales and the sales are based on the payouts. So if a payout is missing, so are the sales, right? Here, we're treating them separate. We give you the sales first, then we bring the payouts behind it, and then we reconcile everything and match it out and give you a very clear way to see what's missing and if there are any discrepancies and what they are and how to deal with them. That's a little bit about how our system works in that regard. Now, if I go into QuickBooks, let's kind of show you that and wrap this up. If I go into the bank transaction, I'll go to the bank register. Now I have a checking account I set up. I call it Shopify Checking. It's what I use for my testing. And you'll see here, here it is, $153.97, right? That's the net payout amount. If I go into it, no pun intended, that was really not an intended joke at all. It just kind of came out that way. You'll see here, those 2 sales receipts are automatically checked off. I didn't do that. It was automatically done for me. So imagine if you had 500 orders on a payout. Boom, you'd come in here, they're all checked off for you. And remember I said about locations? Here's where you can filter out by location. So if I want to see just one Shopify store or a different Shopify store or everything that's not a Shopify store, right? I can do that. Then if I go to the bottom here, right, because that's the gross sale, we put the net fee, the Shopify processing fees here at the bottom into the cost of goods account that you set up. So whatever you call that, going back to the chart accounts conversation we had earlier at the beginning of the conversation, you map that in our system to use that account, and then that's where we put all your Shopify processing fees. So we treat them separately. We don't make it part of the sale. We don't reduce the revenue as a result of it. Gross sale is gross sale. Processing fees are processing fees, right? But the net total ties out to the penny to what the deposit was. So that's just an example to show you how simple Shopify bookkeeping can be, even when you work, especially when you work with details, I should say. And so we're very excited about that.